So the next standard which we are going to discuss here is IFRS 5. It is non-current asset held for sale as well as discontinued operation. So these two items are getting accounted as per IFRS 5. Okay. So held for classification means, suppose if you are keeping an asset in our company which is held for sale, like in that scenario, how you are going to account for that particular asset. So here we can hold it for sale if the carrying amount will be recovered principally through a sale transaction rather than through continuing use. So here we will be accounting for this transaction. As a sale rather than using it for the future. So rather than using it for future, we are keeping this asset for sale. So the carrying amount of that asset is not recovered by using it for the future, rather than using it for the future or by continuing use. This benefit of that particular asset is going to get realized by sale. Okay, rather than using it, the benefit of that particular asset can be realized through sale. So what are the criteria through which we can say that we can keep this item as asset held for sale? How will you account for these items as asset held for sale? First one, it should be available for immediate sale in the present condition. Should be available for immediate sale in the present condition. Then the sale is highly probable. We should make sure that the sale is highly probable. What are the indicators? First one, we should have the management should have committed to a plan, and there is very unlikely chance that the management will change this plan as well. Okay, and there is active program to locate the buyer initiated, and the sale should be completed within 12 months, and active marketing at a reasonable price. The price that we are quoting should be reasonable, and there should not be any significant changes to this plan, and it is very unlikely that any changes in this plan will happen. Okay, we should locate the buyer, there should be commitment to the plan, and there should not be any significant changes from this plan. Okay, so like normally if you are planning to sell a building, you will keep the advertisement, right? For sale, we used to keep the tag like that. So advertisement, if I keep an advertisement that it is kept for sale. So these are certain indicators that if for a building which you are planning to sell or a plot which you are planning to sell, we will keep the advertisement, right, for sale, like that. So in that situation, it is giving a confirmation that this item is held for sale. Okay, so we'll discuss here the situation. On 1st December, the question is, can the manufacturing facility be classified as item held for sale? Here, can you consider this as item held for sale? So on 1st December 2003, the company became committed to a plan to sell a manufacturing facility and has already found a potential buyer. So they have already found a potential buyer. The company does not intend to discontinue the operation currently carried out in the facility. The company does not like to discontinue this operation currently carried out in the facility. So as at 31st December 2003, there is a backlog of uncompleted customer orders. So here they have told that The company became committed to a plan to sell a manufacturing facility, has already found a potential buyer. The company does not intend to discontinue the operation currently carried out in the facility. Okay. At 31st December 2003, there is a backlog of uncompleted customer orders. So, we are planning to sell the manufacturing facility. We already found a potential buyer as well. But the company does not intend to discontinue the operation currently carried out in the facility. They currently, whatever the operation which is carried out in the facility, they are not planning to discontinue it. Okay. So, but they want to sell the manufacturing facility. So at 31st December 2003, that is given that there is a backlog of uncompleted customer orders. The company will not, as well as the company will not be able to transfer the facility to the buyer until after it ceases to operate the facility and has eliminated the backlog of uncompleted customer orders. And this is not expected to occur until spring 2004. So there are backlog orders are there. The company will not be transferred the facility to buyer until it ceases to operate the facility and has eliminated the backlog of uncompleted orders. And this is a plan. This will occur till 2004. So here, as a summary, I can say that they want to sell this manufacturing facility. They want to sell this manufacturing facility, but so here they have told that the manufacturing facility is, they are planning to sell this, but some of the work which is going to get conducted in this manufacturing facility is not done yet. So there are some uncompleted work. So we have an obligation to complete it, and it will take almost 1 year to complete it, but they have the intention to sell it as well. So in this situation, can you account it as an item held for sale? That's a question. Here, the facility will not be transferred. We know that the facility will not be transferred until the backlog of orders is completed. So here, unlike in F7, we can't just write that okay, it should be accounted as IFRS 5 item held for sale or not. We have to explain with some elements which is given in the question as well, right? So the facility will not be transferred until the backlog of orders is completed, and this demonstrates that the facility is not available for immediate sale in its present condition. So it demonstrates that it is not available for sale in the present condition, and the facility cannot be classified as item held for sale as at 31st December 2003, and it cannot be classified as item held for sale as of 31st December because of some works are still pending. So it is not presently available. What was the first condition? Presently it should be immediately available for sale, right? It should be immediately available for sale in its present condition. So here in the present condition it is not immediately available for sale. So by considering that matter, we can say that this item should be classified as an asset held for sale as per IFRS 5. Should not be classified. We cannot classify this item as an asset held for sale. It must be treated in the same way as other items of PP, plant, property and equipment, and it should continue to depreciate it and should not separately disclosed. It should not be separately disclosed. The facility will not be transferred until the backlog of orders is completed, and this demonstrates that the facility is not available for immediate sale in its present condition. The facility cannot be held for sale as at 31st December 2003, and it must be treated in the same way as other items of PPE, and it should continue to be depreciated and should not be separately disclosed. Clear? We'll still continue to treat this as PP itself. We don't need to make any separate disclosure or something like that, because currently the item is not held for sale. Perfect? Because still the works are pending, right? That's it. Then how will you account for it? Once an item is accounted as per IFRS 5, as item held for sale, then the item should be accounted at lower of carrying amount and fair value less cost of sales. It should be accounted at lower of carrying amount or fair value less cost of sales, because this is an item to be sold, right? So almost remember the inventory accounting. Normally when it's an inventory, we know that it should be either accounted at lower of cost or NRV, because inventory is held in the business to sale, right? In the same way here also, if it's an item, since it's an item held for sale, it should be shown at lower of carrying amount or fair value less cost to sell. And the depreciation should be ceases, and depreciation will get ceases at the moment when we enter for sale. So once this item is held for sale, we don't need to depreciate it further, but still we have to check for the impairment. So please note that even though it is held for sale, we'll still check for the impairment, and it will be presented separately in the SOFP. It will be presented separately in the item. It is instead of accounting it as non-current asset, it will get accounted as current asset, because it is going to get realized within 12 months, right? So instead of accounting it as non-current asset, it will be accounted as current assets. So here it will be accounted as other than non-current asset part, this will be accounted in the SOFP. It's a sample disclosure. Okay. Instead of accounting in the non-current asset side, this, even though it's a PPE, if it is held for sale, it will be accounted as current assets in your SOFP, okay, at lower of cost or fair value less cost of disposal. Perfect. So here we can do another question. So here they have told that show how the required accounting treatment for the asset. So here the L company has an asset with a carrying amount of 150,000 and is held under cost model, that is 200,000, and being depreciated through straight line over 8-year life to a nil residual value. Okay. So at 20x3, the L company classifies the asset as held for sale, and all necessary criteria are met. At that date, it is estimated that the asset could be sold for 135,000, and that it would cost $1,000 to secure the sale. So that's an important point to be noted here. So here the item is held for sale, right? And the carrying amount is 150,000, and it is held under cost model. The cost was 200,000, and it is being depreciated over a period of 8-year life to a nil residual value. Okay. So that's how the asset is treated in these books, and they are given some details about that asset's history as well. So at 1st July 2003, the L company classified the asset held for sale. All criteria are met. At this date, the estimated cost of selling this asset will be, the estimated amount you are going to get will be 135,000, and it would cost 1,000 to secure the sale. So the question is, how will you account it? The first one, the carrying amount at 1st July 2003. So the carrying amount of 1st January 2003 is how much? It is 150,000. So 200,000 divided by 8. 200,000 divided by 8. So every year the annual depreciation is how much? What's the annual depreciation? It will be 25,000, right? So 25,000, instead of 25,000, here we have to depreciate it from 1st January to July. So how many months? We have to depreciate it for 6 months. So this one into 1 by 12, 25,000 into 1 by 12, 150,000 into 25,000 into 1 by 12, so that the remaining carrying amount on that date will be 137,500. And we need to know what is fair value less cost of disposal. Fair value less cost of disposal is 135,000, and the cost of disposal is 1,000. So it will be how much? 134,000. It will be 134,000. So what's the net amount? What's the net amount? So instead of, we know that the asset should be accounted at lower of this amount or this amount. So which one will be used? We'll be using this item, right? So whatever the difference, that is 3,500, which will be recognized as an expense in the P&L, and we can, as a result, from 1st July 20x3, we will continue to show this asset at which figure? At 134,000. So asset should be separated as a non-current asset held for sale and to be shown at a value of 134 this one, and no more depreciation is given, and the asset will be measured at the historic cost on that. Okay, so that's what with IFRS 5 asset held for sale. Okay, so apart from that, there can be discontinued operation as well. So discontinued operation means it can be a subsidiary or a separate associate or something like that. So a group of asset to be disposed of collectively in a single transaction, directly associated liability that will be transferred in the transaction. So let's say if you are disposing a subsidiary, or if you are selling off a separate process of your company, separate operation of your company, so this all items will come as a part of your disposal group. So a discontinued operation means a component that has been disposed of or is classified as held for sale. It can be either disposed of, or even if you are keeping an asset, let's say if you are purchasing a subsidiary and we have an intention to resell it. We are purchasing a subsidiary and we have an intention to sell it. So in that scenario, since you have an intention to sell it, it is not sold yet, so we have an intention to sell it. So this particular item will be accounted as an item held for sale. So that's why this discontinued operation also comes as a part of IFRS 5. Even though it's a discontinued operation, but if you are just held it for sale, then it will be accounted as per IFRS 5. So it can be a separate major line of business or geographical area, or it can be a part of the single coordinated plan to dispose of that line of business or area of operation, or can be a subsidiary exclusively held with a view to resale. So it can be a separate major line of a business or a geographical area. The discontinued operation can be a separate line of business or geographical area, or it can be a single coordinated plan to dispose of that line of business or an area of operation, or it can be a subsidiary acquired exclusively with a view to resale. So all items will come as a part of your discontinued operation. Next one, present in discontinued operation. So discontinued operation, whatever their profit or loss, the profit or loss of discontinued operation should be accounted separately in the SOPL. So that is post-tax profit on discontinued operation as well as post-tax gain on loss on revaluation on disposal. Okay. So analysis of the single amount in the SOPL or the note. So we should write what's the revenue or the expense, related tax for the period, the gain or loss, the related tax, everything will be shown as a single amount in the notes, either in the notes or SOPL. So as I've told, before the profit from the discontinued operation, we'll show it separately. What's the discontinued operation profit and what is the continuing operation profit. What is the profit from continuing operation and what's the profit from discontinued operation, we will show it separately. Okay. So finally, when we get the total, from that we will allocate what is allowable to owners of the parent and what is to NCA. We'll show it separately. Okay, so that's it for discontinued operation. Either in the notes we will show it separately, the related revenue, the related tax, gain or loss, everything, or we'll simply account it as a separate line item in the SOPL, that is profit for discontinued operation. As a separate line item we will disclose it. Is it clear, everyone? Okay, so that's it for discontinued operation. Should be classified as a separate line of business. Okay, that's it.